Okay, welcome back to capitalforextraining.com. So now that we know how to identify a flag, we're going to go through exactly how to trade it. So I just want to, before we go into our real charts, just want to spend a couple of seconds going through how to enter the trade, where to put your stop loss, and how to measure your profit targets. But I want to do that in this basic drawing first, because then it's going to be a lot easier to reference on the real charts. So if we reference the left-hand drawing here, which is a bullish flag, as we said before, we've got a flag pull going in an upwards direction, then an area of consolidation that's defined by these two red lines. So the top of the consolidation with the top red line, and the bottom of consolidation on the bottom red line. So in terms of your entry, what you're looking for is a break above that top consolidation trend line, but you're not looking for a candle just to go past it and then close and then go back underneath. What you're looking for is for a candle to actually close over that line. So not just break, but actually close over that upper sloping line. And once it does that, you place your entry to go in an upwards direction. What you then need to do is measure your profit target, and your profit target is the same distance between the top consolidation line and the bottom consolidation line. So let's say, for the sake of the argument, that is 50 pips, as I've put here. Then you simply take your measurement tool and you measure 50 pips from the top trend line, or just a few pips inside it, actually, just to not be too greedy, and measure 50 pips in the upwards direction. And let's say, for the sake of argument, that measures to this green line here. That equates to 50 pips, and that is your profit target. That is you out of that trade. And lastly, if you just place a stop loss just a few pips below that bottom consolidation line, and that's your trade set up. So the same applies in a bearish flag, but just the opposite way around. So what you've got here is a flag pull going in a downwards direction, then an area of consolidation with an upper consolidation line and a lower consolidation line, both in red. So what you're looking for in terms of entry is a candle to close below the lower consolidation line. Once it does that, you place the trade to go in a downwards direction. You place your stop loss to be just a few pips above the top consolidation line, which is the one in red there, and you measure the distance between the top and the bottom lines here. So let's say, again, that's 50 pips. You take your measurement tool or your cursor, you go just in a few pips inside the bottom consolidation line, so it'd be just a few pips above, and then you measure 50 pips, and let's say this equates to 50 pips here, this little green line, and that is your profit target, and that is you out of the trade there as well. Okay, so let's go to our real charts where we can reference this in real life. So what we've got here is I can actually see three flags being formed, but that's because I've been doing this for a long time. And the problem is with flag lines, with flag poles, that sometimes it can be very difficult to know which is the correct consolidation area. Because what I've got here, for instance, is a flag pole going upwards, but then I've got a trend line I can draw in terms of consolidation there, and I've got one I can draw there as well. You know, which is the right one. So I'm just going to delete that at the moment and introduce you to Bollinger Bands, which is an indicator that we've actually discussed before, but in terms of looking at flags, it's the best, by far the best indicator to use. So let me just locate that. Sorry, it's taking a bit of time here. So when you load up Bollinger Bands, make sure that you set your period set at 20, or it can be 21. In fact, it doesn't matter. The fractional difference is very small. Click OK. So as we just go back to our previous example, so I've got a blatant flagpole there, and then what I'm looking for in terms of the consolidation is a bounce off the bottom Bollinger Band, which I can see there. So I know that this here is not the upper consolidation trend line that I thought it's not the right upper consolidation trend line to draw. So what I'm going to do, I'm just going to move it here so that it connects this high here. Okay, so I've done that there. I'm just going to zoom in a little bit to make it a little bit easier for you to see. So I've got my trend line there, starts there and then there. Okay, so we've got the top of the flagpole connecting the top of the consolidation, which I've only drawn once I see a bounce of the Bollinger Band. So my bottom consolidation line is from this point to this point here. So my distance in terms of trading is, let's have a look, we've got a flag that you can see here, we've got a candle that's closed above the top consolidation line. So I'm just going to drop a few pips inside. So my target is 236 pips. So if I measure 236 pips, that is 98,180, and that is 98,180, just there. Okay, and I'm just going to make that a little bit thicker for you to see. Okay, I'm going to zoom out, it's be a lot clearer. Okay, and you can see that that is our flag. That's exactly the same as our drawing before, except our target is there, and this is our 1-to-1 ratio that we've spoken about earlier. So this distance here is equivalent to this distance here. Okay, and remember, it's very important, you're looking for the consolidation area in a bullish flag to bounce off the bottom Bollinger Band to go in an upwards direction. Okay, so let's go for another one. Let's see. Okay, we've got one here. So I've got a flagpole going down, then I've got it looks like the market is going back in the upwards direction, but in fact it actually bounced off the top Bollinger Band and then continued to go down. So what, in fact, I'm just going to zoom in a little bit again in this example. So what we've got here is this consolidation area there. So now I'll connect these points here after I see a bounce from the top consolidation. So remember we were talking about different shapes and sizes? Well, here's another one. Look at that one. It almost looks like it shouldn't be a flag, but it is. This is how flags work. Unfortunately, they've changed in terms of how they're even traded, because before you used to trade these flags by measuring the flagpole, and then let's say that was 100 pips, and then starting to measure 100 pips from this point here down to some point down there, and that would be your target. Well, if we did that in this first example, that wouldn't have worked, because it's far too, you know, the target would have been just a few, about another 30 or 40 pips above. So what you're looking for to be extra safe is to trade it the way that we've just explained, and that is to measure this distance here, which is, let's say, in fact, we're going to find out exactly what that was. So that is 177 pips. So we go down here, 177 pips. That's 97,746. 97,746. Okay, and you can see how quickly that dropped. Okay, and simply because everyone's kind of trading the same thing, really. So I'm just going to zoom out. So remember, in a bearish flag, you're looking for the flagpole going downwards, a consolidation area here that bounces off the top Bollinger Band and then continues in a downwards direction. Okay, so the only other thing you need to bear in mind in terms of trading this pattern is not to trade above tops and bottoms. So for example, if we're trading in a upwards direction, remember in our first example, which was just about here, you know, if you've got plenty of room there actually to trade, because you can see this area here, you know, there's loads of room, you know, there's no tops here to be seen, so you can just trade upwards. But if you're trading in the downwards direction, you can see that the bottom of the market at the moment is down around about here. So if this flag that we're trading in a downwards direction occurred anywhere down here, then you probably wouldn't have traded it, because your win to loss ratio wouldn't probably be 1-to-1. It'd probably be kind of 1/2 to 1, which means you wouldn't have got half as much profit, but you would risk quite a lot of loss. So just remember not to trade past bottoms if you're trading a flag in a downwards direction, and the same, don't trade past tops if you're trading in the upwards direction. And the last thing to really kind of reference is if we go to, let's just go back to the first example where we've got this flag here. Okay, so we've got a bounce off a Bollinger Band, and we've go into a different time frame. So we'll go to the M30 you can see that the flag is exactly the same in terms of its formation, but it doesn't quite touch the Bollinger Band. Let's go to H1, which is the 1 hourly chart. You can see exactly the same. It doesn't touch the Bollinger Band. But if you're trading the hourly time frame and you see a flag forming, but it doesn't bounce off the Bollinger Bands, that doesn't mean that you can't trade it, okay? Just reference a few time frames below to see whether the Bollinger Band bounce is happening. And as you can see in the 15-minute chart that we're in now, that is actually happened, but it's exactly the same trade, you see? And that's where a lot of people miss out, you know, and to be honest, I don't really know why, but this is probably the most perfect way to trade these flags, because the only thing you're looking for, really, the most important, the key to the trade, is the area of consolidation in different time frames where it hits that lower Bollinger Band. Okay, so anyway, guys, I'll leave it there. It really doesn't get much harder than that in terms of the flag. If you're stuck, just rewind the video again, have a little listen again. But I've tried to explain this in the simplest way I can. But just remember to look for the bounce in the Bollinger Band when you're looking for a flag within that consolidation, and you should be able to trade these patterns very successfully. Okay, we'll see you for the next video.